Hello, everyone. Welcome to this week's weekly market view for Monday, the 19th of June to Friday, the 23rd of June, 2023. My name is Vishal. Let's get started. All right, so let's start with the Nifty analysis and let's start off with the monthly chart. So let's zoom into the monthly chart and let's see what's happening on the monthly chart. So this level 17,473 to 16,732 is holding. We are more or less approaching the all-time highs. The all-time highs are more or less at 18,887.60. And in the Friday's move, we made a high of 18,864. So just 20 odd points for the market to make an all-time high. Let us see if the market does make an all-time high on the Nifty, suggesting us that it might continue to move up further in a very strong way. If you look at the weekly chart, we are coming into a resistance level here. So there is this new level of weekly demand. So let's go ahead and mark this level over here. So in case if we do get a new high, then this level will come into play. Let's go on to the daily chart. On the daily chart, we do have this level 18,548 to 18,465. This will be a level to watch out for just in case if the market is unable to make a new high and probably reacts to this level over here, then we might get a little bit of a stronger corrective move towards 18,548, which does not mean that the market is going to take a turn and reverse, but it might continue its move to the upside. On the 75 minutes chart, these are the two key levels, 18,703 to 18,668. And on the demand front, you have 18,608 to 18,556. On the 25 minutes chart, 18,767 to 18,744. This will be a level to watch out for in case if you are looking at some day trading opportunities. And on the 5 minutes chart, we have these two levels, 18,745, 735 and 18,689, 678 from the current market price. So we still have a lot of room to go towards this area, and maybe any kind of a pullback can be initiated for a long. Let's move on to the next market, which is the Bank Nifty. And let's look at some key levels on the Bank Nifty. Let's start with the monthly chart. On the monthly chart, we have this drop base rally. It's made an all-time high. So this level is going to be a level of importance if market does give a pullback towards this drop base rally level. If we go on to the weekly chart, we have this 40,457, close to the 40,500 handle to 38,694. This is a level from where the market has made a new high. So this is the origin of the move. On the daily chart, we have this level over here, a little bit of a broader level here, but you can see very clearly that every time the prices did come down to this level has held pretty strongly, and the markets have moved further up. Now, very, very interesting, although Nifty is close to making all-time highs, the Bank Nifty does have a little bit of supply towards the upside. On the 75 minutes chart, you have this 44,226 to 44,451 odd levels. And on the demand side, we have this 43,350 to 43,138. Now, although this levels or these levels or the range might look a little small, it's still a pretty decent range, right? So we could expect this week the markets to be a little range bound between these two levels, at least on the Bank Nifty. Obviously, if this level does break, then we are going to again move into what we call as an uncharted territory. But these two key levels are going to be important for this week. On the smaller time frame, which is the 25 minutes chart, these are the new levels of demand: 43,755, 687, and 43,500 to 43,401. This is your pro gap. And on the supply zone front, you have this one key level here, 44,381 to 44,471. Let's move on to the 5 minutes chart. On the 5 minute chart, this is your level, 43,723 to 43,685, and you have supply around 44,315 to 44,340. So these are going to be the key levels to watch out for this week on the Bank Nifty. Let's move on to the next market now. Let's dive down into the Finnifty levels. So let's quickly mark the Finnifty levels on the chart. Let's start off with the monthly chart on Finnifty. This is the June contract. So this is your monthly level of demand, which is more or less in the making. On the weekly, you have this level 18,041 to 17,316. Okay, if we go on to the daily, so I don't have anything on the daily marked. Let's move on to the 75-minute chart. So we have this rally-based drop, 19,583 to 19,660, depending upon today where the market opens. Maybe the SGX Nifty is indicating a gap up. So we might open gap up. And if the market does open straight into this supply, then we might see a little bit of profit booking coming in the morning session. All right, but we are a little closer to supply right now. So unless and until this level breaks completely to the upside, any longs should be avoided close to this area, right? The level of demand in play or which has caused this move to the upside is this 19,137 to 19,000 odd level. So any move coming back to this level of demand, longs should be the focus. On the 25 minutes chart, we have this gap level over here, 19,585 to 19,629. So again, if the market does gap up into this level, this will be a level to watch out for. And this drop-based rally here, 19,276 to 19,255 will be a level to watch out for. All right, so let's move on now to the currency market, which is the USDINR, and let's try to gauge what the USDINR is telling us. So nothing has changed much on the monthly chart. Prices are, just been consolidating for the longest period of time. And this has been a little bit of a very, very sideways market. But what is happening right now is that at every time USD-INR moves to the upside, it is, kind of getting sold off here, right? So now if we do see a strong move of the USD-INR to the downside, and because it has inverse correlation with the Nifty, there is a likelihood that if USD-INR continues to move down, then Nifty is most likely to move up and make that all-time high. So it's going to be a little interesting to see whether that happens. And if the USD-INR does gap down or come into this level, then it is most likely that Nifty will also move to the upside. So I do not have any levels on the daily chart. I do have some levels on the 75-minute chart. So the two key levels of supply and demand are as follows. 82.27, 82.33 as a supply, and 81.77 to 81.69 levels of demand. So these are going to be the key levels to watch out for today's session. Let's move on to three key stocks. So today we are going to look at Reliance, HDFC Bank, and Infosys. And let's go ahead and look at these levels. Now, why is it important to look at these stocks? These stocks are the index heavyweights. And generally, whenever these stocks come into major levels of demand and supply, that's how the index also starts to react. So it's important as a trader to keep a close watch on these three stocks, HDFC Bank, Reliance, and Infosys, because they are heavily weighted on the indices. So on the monthly chart now, we have this supply zone 2600 to 2765. We are coming into this level. We haven't yet touched the level. So there is still room for Reliance to move to the upside. On the weekly chart, we have two demand zones and one supply zone here, 2515 to 2418. This is a new level which was created last week. And the week prior, we had this 2290 to 2186 odd level. So it will be interesting to see how Reliance shapes up for the coming week. And that will also dictate the terms to which direction the Nifty is going to move. Very, very interesting that in the move on Friday, Reliance has come straight into this level of supply, 2557 to 2609. So depending on, the gap move, there is a possibility that we might move towards this 2590, 126.11 area. It will be interesting to see if Reliance gaps up over there. How does the price react on the stock? On the demand zone front, 2455 to 2418 will be a level to watch out for. Let me just load the local data here. So when I load the local data, and if I look at the 75-minute chart, right? So this 2583 level to 2603 level is going to be a level to watch out for. We might gap up based on the market open today in this level. And we will have to see how Reliance also reacts. So if Reliance gaps up and starts to move down, then very likely possibility that Nifty will also start to move down because of Reliance moving down. Okay. Nothing much on the intraday time frames. Let's move on to the next stock, HDFC Bank. And let's start off with the monthly chart on HDFC Bank. All right, so on HDFC Bank, we are into this rally-based rally demand zone. Not a very, very good level to say so, but it still has its odds going on and working. If you look at the weekly chart, we are into this 1590, 1527 level, and we can see that how the candle for the week has closed. It's trying to pull in the orders from this area here. Let's move on to the daily chart. On the daily chart, we have this level of demand, which is in play, 1583 to 1556. And we still have a lot of room to move to the upside towards 1631 and 1644. So if HDFC Bank starts to move up, then it's more likely that Bank Nifty will also start moving up towards that 75 minutes supply zone. And then we'll have to possibly see what could be the opportunity. And the last stock for the day is Infosys. So let's quickly have a look at Infosys. And Infosys is quite evenly poised, because if you look at, let's start with the monthly chart. So on the monthly chart, we have this 1497 to 1691 odd level of supply. And then we have this level of demand, which is very, very far away. So the bias is that any pullback into this level, there is a possibility that the market will start moving down further, right? Let's move on to the weekly chart and let's see what's happening on the weekly chart. So on the weekly chart, price came very, very close to hitting this weekly level of demand. It just bounced slightly before it, which is indicating that possibly this 1165-1067 is going to be a very, very strong level of demand. And if it's a strong level of demand, then prices should not cut through this level. But on the upside, on the weekly chart, we have 1385 and 1443 as a barrier. So unless and until these levels break, the chances are less for Infosys to move to the upside. Okay. On the 75 minutes, these are the key levels on Infosys, 1306 to 1310. This will be a key supply area. If this level breaks, then we might move into the upper areas. And on the demand zone front, we have 1268 to 1263 as one level. This level will more or less be coming into play if this supply zone is taken out. But 1251, 1242 still stands to be a very, very strong level, right? Because it was the origin of the move. And it is what this was the level which caused Infosys to make this new high. So definitely watch out for these two levels of demand and this one level for supply on Infosys. All right, so I hope you enjoyed the analysis for this week. We looked at a few stocks and we looked at some key levels on the indices. If you do like our analysis, please click on the YouTube channel, Sher Khan Education, and do like our videos. And if you have any valuable comments, do post your comments in the comment section. Thank you, everyone. Have a lovely trading week. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.